Hey, welcome to the channel. I'm Kevin, and with today's video, I'm hoping to save you all thousands of dollars because by the end of it, you'll all be experts at building strong credit scores. And with high credit scores, you could more easily qualify for better places to rent in certain cities, lower interest rates on car payments, or lower interest rates in mortgages, where just 0.5% of a difference in rate can save you almost $20,000 over the course of your mortgage. So let's get into it so you and your friends can save some money. So the first major thing to keep in mind, other than to get your credit card ASAP and start building that journey, is to keep your utilization low. You can get a sense of how much credit you have by summing up all your credit limits across all your credit cards. So if you have, say, 3 credit cards with $5,000 of credit each, then your credit limit is $15,000. The holy grail of utilization percentage is to keep it between 1 and 10%. So with a $15,000 credit limit, you want to keep your spend at about $1,500. If you can't do that, then at least try and keep it under 30%, which is still considered good. Notice how I didn't include 0%, because having credit but not using it doesn't give a chance for lenders to see how good of a person you are by handling credit when you do have it. The best way to get around this is to at least put some form of recurring payment on your cards, like a subscription to maybe Netflix or Spotify. And because we're talking percentages here, you don't have to just reduce your spend to try and get a lower utilization, but you could also increase the amount of credit you have. Now, only do this if you can handle more credit responsibly, because getting more credit and maxing out and not being able to pay it off is even worse. But with so many credit cards out there, especially those with $0 annual fee, and give you hundreds of dollars in benefits and rewards, there's a ton you can do. I'll have a video breaking down my favorite $0 annual fee card up in the corner and down in the description if you want a full rundown. Alright, so you have low utilization percentage, but how do these credit bureaus actually get this information? Well, banks usually snapshot and send this information to credit bureaus once every billing cycle, usually at the end of the cycle. There's no obvious place where this happens, but I suggest just making sure that you're paying down your credit card every single month. You could even try paying down your credit card earlier, especially if you have a certain high spend on the card. So when it comes to reporting, the credit bureaus don't see that you're using that much of your credit. Yes, this is really optimizing to get the lowest possible utilization percentage, but it could be the little push you need to get those top credit scores. One other thing you can do is once you have a good relationship with a credit card issuer or bank, you could call them up and ask for a higher credit limit, which they could just give you. For most people though, just make sure you're paying off your card in full every single month and not making any late payments. Which brings me to my next point, which is to make sure you're paying your bill off in full every single month across all of your credit cards. Doing so shows these lenders that you have a long history of always paying down the debt that you have. So lenders in the future know that if they were to lend you money, you'll continue to do so and won't be labeled as a high-risk borrower. And being a low-risk borrower also means that you could get the best rates and terms for your deals. There's a really persistent myth out there that says that you can improve your credit if you carry a balance month to month. That is not true, and do not follow that. What does increase your credit score is by using it to a certain degree and paying it off every time. On that note, paying off your card regularly helps a lot, which means that if you have more credit cards, you could also get more regular payments. One card gets you 12 payments a year, 2 card gets you 24, and so on and so forth. And remember, having more credit cards also means you have a higher total credit limit, which then means you have a lower utilization percentage. Something you can do to make sure you're always paying on time is to set alerts when that time comes around, or just make it so it auto pays. Personally, I have auto pay set up on basically every single one of my credit card accounts, so I never miss a payment. But that doesn't mean that I don't regularly check my statement from month to month. Although it is true that credit card companies won't report your late payment unless it's more than 30 days old, But if you do miss the payment, you're still going to incur late fees from $20 to $30, which is never fun to pay. Real quick, if you're finding these tips useful and enjoy content like this, let me know by tapping that like button because it really helps. Next tip I have for you, especially when you're just starting out, is to add yourself as an authorized user to another person's account. This works because by being an authorized user, you also adopt their good credit, and that will slingshot you to have good credit yourself and to apply for credit cards on your own. You'll want to make sure that this person has rock solid credit score in the high 700s or 800s and a lot of unused credit utilization. That's because when you're using the card, you're cutting into their utilization, so you don't want to be negatively affecting their card much. The biggest danger here is that there needs to be trust, especially with the primary cardholder and you. You're benefiting from their credit, and so if you max out your card or tank the credit score, then you're affecting their credit. One way to avoid this is to maybe sign up as an authorized user for this person, but then give them the card to hold and never actually use the card, because you're just using it to get their score, not necessarily needing a credit card to spend on. That way, there's no real risk to them, and sometimes they even get a bonus for adding people as an authorized user. Adding yourself as an authorized user also means you don't have to go through your typical hard pull in order to get this card. Speaking of hard pulls, the next tip I have for you is to limit the number of hard pulls on your account. Hard pulls are when companies are about to extend another line of credit to you, so they check your history to see how good of a borrower you are. These aren't limited to just opening new credit lines either. Sometimes when you're applying to rent somewhere, the landlord or property manager will also pull your credit to see how good of a borrower you are and how on time all your payments are. This is in contrast to soft pulls, which don't affect your credit score, but are for things like getting a new job and trying to pass a background check, or credit card pre-approvals. Usually hard pulls will only dip your score by single-digit points temporarily, but a lot of hard pulls in a short amount of time can really negatively affect your score. Having a lot of hard pulls in a short amount of time means that you're trying to open a lot of new credit lines in a short amount of time and seem really desperate to have credit, which makes you seem more risky. If you know you're about to apply for something big like a mortgage, then make sure you keep your credit score clean and not apply for any new credit lines 3 to 6 months before you're trying to apply for your mortgage. Remember, a 0.5% difference in your mortgage interest rate could amount to almost $20,000 over the lifetime of your mortgage. Another thing is to understand your credit situation and stop applying to cards that are outside of your reach. For example, if you're new, you're 18, it's your first credit card and you don't have any credit history, then you know you're probably not going to get approved for premium cards like the Chase Sapphire Reserve. So applying for those cards only means that you're getting a hard pull and a dip in your credit history and credit score for no reason at all. Okay, tip number 5 is to regularly review your statements. Like I mentioned earlier, even though I have autopay on, I still check out my statements every month or so just to make sure there's no irregularities. Maybe I'm just unlucky, but in the past 4 to 5 years or so, I've already found 2 to 3 times where there were fraudulent charges on my card in few $100s each. Unless you check, these would have just flown under the radar and hit your credit utilization for no reason, as well as having you have to pay for those charges. But if you find those and flag them as fraudulent, they'll just be taking it off your card. Another thing is to make sure that your cards are in good standing. The mistake I made was I forgot to use one of my credit cards for over a year and it auto-closed, meaning my total credit available dropped, as well as the age of my credit history. Now, thankfully, it didn't affect my credit that much, but for some people, if there's only a few credit lines, that could be a big factor. So make sure you're putting some form of charge every few months or so on the card to keep it in active and good condition. If you have credit cards that are paying annual fees, but you're not getting any benefit out of them, also consider downgrading them to no annual fee cards so you can keep that account open as well as the credit limit you have there to keep your overall utilization low. Alright, bonus tip, and that's to use credit monitoring services like Credit Karma. Now this is not sponsored, but I've been using Credit Karma for years, and it's an awesome way as a one-stop shop to look at all things related to my credit. I see things like my score, what makes up my score, what improvements can I make, and suggestions of things I can change. It also shows you issues on your credit history that you might have missed, like maybe a late payment for some bill that you completely forgot of. Then that helps you identify and try and address these issues. It's also a good way just to get a spot check of your credit score, to know when you apply for other credit cards, loans, and things of that nature. It's really cool to see this overall breakdown of your entire credit history, especially for me when I started my credit journey here in the US about 5 or so years ago. Over that time, I've been able to build up my credit score to almost 800 points, and you can too. If you want to see my journey throughout all of my credit cards, what type of credit cards are in my wallet and what I'm planning to get, check out my video that I go through all my credit cards and why I got each of them up in the corner and down in the description. Also, let me know what other topics and cards you want me to cover. And as always, thank you so much for watching. Invest safe, spend safe, and see you in the next one.